Good morning, everybody, and this is your S&P 500 day trade setups for today. So, yeah, lots going on. I think I've spoken quite a bit about it in the previous two videos, but ultimately we have the invasion, which was pretty much you could see it on the charts, or something was going on, and then you had the US response over here. And the US response was well received by the market as it moved the market 3.5% back up. So what it meant is it's left us with a massive green pin bar on the daily, not quite off a level of structure that I would have liked, but some structure nevertheless. So if I just line that up there, you can see there's the previous daily areas: resistance, resistance, support, support. And if you get back here, now we dipped quite far below it, but then came up. But anyway, look at the daily oscillators here. Look at the weekly oscillators, grouped quite nicely as well. And as far as I'm concerned, this is not an area to be shorting just yet. And I said this yesterday, it's a dangerous area to be shorting. And the reason for it is because when you look at all the oscillators are sort of indicating that we are coming up to an area where potential buyers will be waiting. Now, we have diversions here on the 8 hour. Low, lower low, low, higher low. Okay, so that's the first signal. We've got diversions. We do have a bit of a break. It's not quite off a decent structured level. So 4190 and then 4000 would be the levels you need to pay attention to. We have rallied up into an area of resistance, which is 4272. So keep that in the back of your mind. The trend is down. No debate around that at the moment. Oscillators at the moment are not indicating that this move is up. This up move is finished. So next step is really to wait for what the rest of Europe starts doing now. So the US has announced all their sanctions and what they're doing to Russia. Now you're going to wait to see what's going to transpire out of Europe as well. So I would expect more volatility today. There's still a lot that's going to go on. And I think the key thing here is one of the fears was we're going to enter into a nuclear war, and Europe is not responding with war. Well, not yet. The US is not responding with war. So that is the only positive news. It doesn't help the problem in Ukraine. It doesn't help the people in Ukraine either. But it does prevent another World War III potentially starting. So anyway, all this noises in the charts, and I got quite a few comments yesterday that I wasn't paying attention to it, but it's in the charts. You can see on Wednesday, you can see the sell-off, that something was happening. There was no announcement of an invasion or anything, and then invasion happened pretty much late in the session round here, where rumbling started happening, and then the real news came out quite a bit later. But you can see we had the exhaustion bar, and then we waited. We waited for the US to open. US opened, announced what they were doing, and we rallied. So for me right now, it's time to start refining your levels. This is the first level that I'm paying attention. It does look like we're breaking through it. It's 42.64, and then just paying attention to the different levels all the way down. I do expect us to have some kind of a pullback now on the Asian session, and then as Europe wakes up and starts announcing what they're doing, I expect another sort of bounce up. Ultimately, the trend is still down. So you can see on the hour, we are below the moving averages. Trend is down. We should be looking for an opportunity to be selling. But as I said, on the higher time frames, we have way too many signals that the bottom is potentially coming in. So I'd be very cautious of shorting at the moment. And ultimately, I am looking for a value entry for a purchase at the moment. So 15 minutes is probably the way to go. I don't see any gaps here. So this would be a decent area, 42.34. 4200 would also be a decent area, and then as far as 4190. But at the moment, I suspect that this is a flag forming, and we're probably just going to muck around in a range or in a channel of some sort until sort of Europe wakes up, and once Europe is awake and starts announcing what their plans are, you are either going to see a massive fall if somebody starts sending troops and war instruments towards Russia, and then what you're going to see is a bit of a rally if it just we're going to try and solve it with sanctions. So that's kind of the two scenarios at the moment. The other thing that you need to bear in mind is that the Feds are now being pushed into a bit of a tight spot, especially with oil up like it is, because that's just going to drive inflation even higher. So yeah, there's a lot going on, a lot of moving parts, and you'd be wise to sit and watch it unfold and use it as a learning experience, or alternatively just keep to the 15-minute charts, 5-minute charts, and trade the structure that you see on those charts. And I'm just going to finish off on the 5-minute. And what I'm talking about here, you can see, when we did the video yesterday, we were kind of falling, still moving averages far away. There's nothing really indicating that there's a potential turn until we get the crossover here. We get a break above the 155, come back, we get another break above 55 with a gap, and the 155. So there's your test of the 155. There it is there. So that was your entry, and you could have stayed in once it got moving. Just keep your stop below the 155 EMA, and you can see as US woke up, we rallied. So yeah, I think if you got time and you're not a working individual, and you're sitting in front of the charts all day, you can definitely operate the same strategy on the 5-minute, and it will work for you. Anyway, that's kind of my view at the moment. I am not interested in shorting right now. There's too many warning bells on the bigger time frames that are indicating we have run our run to the downside. So unless something different transpires in what's happening in the political events right now, I think you'd be wise to just be cautious and just wait for a decent level to be breached and tested before committing to any long-term trades to the upside, and start adding to your long-term portfolios. But I think that's kind of the view that I have at the moment anyway. So yeah, hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.